Spot trading is struggling, Bitcoin relies on contracts to support it, staking is surging, and Ethereum is engaging in a capital hedging war. Is September the beginning of a comeback for the crypto market? Or is it the prelude to collapse? Listed companies are starting a war to hoard coins. If you hesitate any longer, you will miss the opportunity. The US SEC and CFTC team up to form a two-horse co-governance for crypto regulation. Is the spot era coming? With its stock price plummeting 60%, is CleanCore's bet on Dogecoin a tragedy or an opportunity? Are tokenized stocks a real trend or just a flash in the pan? Regulation pours cold water on the market.
Wednesday, September 3rd, BitcoinTV Chinese channel. Where is the coin chain? I am Michael. Let's first look at BYBIT, the title of the 24-hour cryptocurrency data headlines. BYBIT, born for professional traders. Scan the QR code to register BYBIT and get instant discount on transaction fees 20%, equivalent to a 20% discount on transaction fees. Historically, September has been a Waterloo for Bitcoin. CryptoQuant's data is straightforward. Average returns are -5% to -10%, the worst of the year. Why? Because this month always sees a surge of macro and political risks, and risky assets suffer along with them. Case in point, the 2011 debt ceiling crisis, China's 2017 ICO ban, Evergrande's debt default in 2021, the 2023 government shutdown, and a hawkish Federal Reserve. Bitcoin has never been spared. But 2025 may be a different story. The Federal Reserve is signaling easing, cooling inflation, and raising expectations of rate cuts. Coupled with optimism about a ceasefire between Russia and Ukraine, risk aversion is easing. On-chain data also supports this. While MVRV is elevated, it's not yet in the danger zone, and the market can still hold up. Currently, Bitcoin is trading sideways around $110,000, held back in the short term by whale selling and miner dumping, but the underlying support remains relatively stable. September has always been the most difficult period for Bitcoin in previous years, but this year may be the time when the September curse is about to be broken. Bitcoin is currently a bit of a paper tiger, seemingly bustling but hollow. Consider the 2021 bull run. It wasn't the contracts that drove the price but the spot market, which surged from 30,000 to 65,000 with unbridled momentum. However, things changed in the spring of 2022. While derivatives continued to thrive, the spot market failed to catch up, sending Bitcoin plummeting from 40,000 to 20,000. Summer and autumn were even worse, with spot markets occasionally bubbling up, but the market remained stagnant, with prices stubbornly stuck near 20,000. Put bluntly, leverage and speculation can keep the market afloat, but without spot buying, this bull market won't last. History has long taught us that a true bull market is inevitably accompanied by a surge in spot prices. If spot prices continue to stagnate, Bitcoin will either remain sideways or plummet. Any further surge will depend on a resurgence in spot demand. Ethereum is currently in a tug-of-war, desperately trying to get in while simultaneously running away. The latest data is quite intriguing. 832,000 ETH are waiting in line to join the validator queue, waiting 14 days and 11 hours for their turn, setting a new record for the longest wait since September 2023. Meanwhile, the exit queue is also full, with 861,000 ETH waiting to be withdrawn, and withdrawals taking almost 15 days. Isn't this a bit dramatic? Institutional and long-term investors are still rushing in, demonstrating their confidence in Ethereum, but some, however, feel that enough is enough and it's time to take their money and leave. Fortunately, the total amount of staked ETH has reached 35.6 million and the APR is 2.9%, so the network remains secure. The problem is that if more and more people exit, the short-term price may face some pressure. However, if the staking momentum continues unabated, the supply of Ethereum will become increasingly tight, strengthening the long-term rationale. To put it bluntly, Ethereum is now in a tug-of-war for funds. Whether it will continue to be a legend or be dragged down by selling pressure depends on whether market confidence can withstand it. Please like and follow us to get the latest updates from the cryptocurrency, blockchain, and mining circles within 24 hours. Click the bell to join the channel and become a member. You will receive your membership code from Monday to Friday. Ethereum has long been despised, with poor returns, missed meme crazes, and declining retail investor interest. But the tide has turned in 2025. May SharpLink Gaming. The first salvo, the use of Ethereum as a reserve asset, has seen listed companies flock to the platform, holding over 730,000 ETH. Does this scene sound familiar? It's remarkably similar to the Bitcoin reserve frenzy of 2020, which is why Ethereum has recently outperformed Bitcoin. More importantly, companies are now playing it differently, no longer treating Ethereum as a speculative asset, but as a core reserve asset. This has led to a corporate arms race, where those who hoard more wield greater influence.
According to an announcement, BitMine's current holdings of Ethereum have risen to 1,866,974. Meanwhile, SharpLink Gaming, another Ethereum vault company, announced that it purchased an additional 39,008 Ethereum between August 25th and 31st, bringing its total holdings to 837,230, with a market capitalization exceeding $3.6 billion.
What we've seen in the last, really in 2025, is the financial services industry and crypto are converging. And it really started with stablecoins, which is the ChatGPT of crypto, right? Because it's viral adoption by consumers, businesses, banks, and now even Visa. Underneath the stablecoin industry is Ethereum.
Coinbase data shows that the total circulating supply of Ethereum is approximately 121 million. In addition to BitMine and SharpLink, several other companies hold Ethereum as funds or operational reserves. A total of 15 entities hold approximately 3.3 million Ethereum, representing 2.75% of the total supply. The largest holder is not an individual or company. According to Etherscan, the Beacon Deposit contract alone has locked up approximately 68.2 million Ethereum, representing over 56% of the total supply.
While Ethereum's Achilles heel is staking, the competition between BitMine and SharpLink actually reflects a broader trend. Publicly traded companies have become accustomed to Ethereum as a treasury essential, directly including it in their financial reports. These companies' holdings now even exceed those of the Ethereum Foundation itself. Furthermore, Propunk Biopharma, a US-listed biopharmaceutical company, has even announced plans to purchase $100 million in Ethereum over the next 12 months. Clearly, this corporate arms race has begun, fueling Ethereum's upward trajectory. The two big brothers in the US cryptosphere, the Securities and Exchange Commission (SEC) and the Commodity Futures Trading Commission, the CFTC, has always been like drunken roommates, with blurred boundaries allowing anyone to interfere. The SEC often asserts that this token is a security, exploiting its power to wield influence over everything, while the CFTC maintains its grip on commodities. The result is a state of confusion. Who's ultimately in charge? However, with the passage of 3 major bills this year, the situation has finally changed. The two parties have made a rare alliance, even issuing a joint statement. It feels like a sudden reconciliation between two former enemies, a truly dramatic gesture.
United States SEC and CFTC, the joint statement clarified that legitimate exchanges may offer spot crypto products. The law does not prohibit SEC, registered national securities exchanges, CFTC registered designated contract markets, or CFTC approved overseas exchanges from listing spot crypto products. Regulators emphasize that exchanges can submit proposals to the SEC or CFTC, which will be reviewed, covering custody, clearing, and investor protection.
Simply put, exchanges will now be able to openly list spot commodities like Bitcoin and Ethereum by applying according to the regulations. This wave of action is in line with directives from the White House. In July, they called for clear regulation, eliminating ambiguity, and requiring greater cooperation from the SEC and CFTC. Now, with the door open, established giants like Nasdaq and the NYSE are also able to participate in the crypto spot market. Even more exciting, the Clarity Act is also on the Senate's agenda, indicating that the US intends to gradually tighten the rules of the game in the crypto market.
With Musk's personal lawyer joining the game, is Dogecoin really failing or just accumulating momentum? Robinhood, the forced promotion has been refuted, and the tokenized stocks are too hot. Will retail investors become the last ones to take over?
The cryptocurrency world is truly a place where same people, different fates. Holding onto Bitcoin and Ethereum can lead to soaring stock prices. Strategy, relying solely on Bitcoin, saw its stock price surge 550% in 2024. Hong Kong-listed Boya Interactive is even more impressive, holding 2,641 Bitcoin and 15,445 Ethereum, generating $165 million in unrealized profits alone. Its stock price soared 1,000% in a single year. Envious, right? But once it switched to Dogecoin, it immediately crashed. BitOrigin announced in July that it had secured $500 million in funding for its Dogecoin vault. Its stock price soared to $1 on July 18th, only to plummet to 39 cents on August 29th, effectively shutting down. Vancouver-based Neptune Digital Assets also bought 1 million Dogecoins, only to see its stock price plummet 62% since February. Now another company has followed suit. Is it true that whoever hoards Dogecoin gets worried?
Part of the reason why I think there's some merit to Dogecoin, even though it was obviously created as a joke, is that it actually does have a much higher transaction volume capability than Bitcoin.
Clean Core Solutions, originally a manufacturer of water-soluble ozone cleaning equipment, recently announced its transformation into a Dogecoin financial company. They also claim to have secured $175 million in funding from over 80 investors, including Pantera, GSR, FalconX, and Borderless. New chairman of the board Alex Spiro, the longtime lawyer of Elon Musk, the world's richest man, spearheaded the initiative. However, the market reaction was muted. Following the announcement, Clean Core's stock price plummeted over 60% in early trading, significantly reducing its market capitalization.
Clean Core's latest move brought in Dogecoin Foundation Director Timothy Stebbing and House of Doge CEO Marco Margiotta, who was also appointed Chief Investment Officer. Despite such a strong lineup, the stock price plummeted by 60%, clearly demonstrating market sentiment. Some are saying Dogecoin is doomed. Think again. Doge doesn't rely on one or two negative factors to survive. It has the backing of a foundation, community traffic, and a strong meme base. A crash? No chance of success. At most, it's just a pothole. Just slow down and the road will remain open. Tokenized stocks have recently become a cryptocurrency palace drama. Robinhood Kraken started boasting that it could buy equity tokens of OpenAI and SpaceX, but was rebuffed by OpenAI, who said they had no authorization and asked them not to use it. The Lithuanian central bank then came to audit the accounts, creating an awkward situation. They are also working on tokenized stocks, but they are very cautious, like walking on stilts. Coinbase, even more audacious, they directly filed a complaint with regulators. Just as the excitement was building, EU regulators suddenly poured cold water on the situation, instantly cooling the atmosphere. Is this a genuine opportunity or just a false fire on the eve of regulation?
What we announced last Monday in the south of France are several products for the EU stock tokens, which give exposure to public listed equities. We have over 200, and those are available 24/5, finally giving our European customers exposure to US stocks. And then we did a giveaway of what we call private stock tokens of OpenAI and SpaceX. And those aren't tradable yet, but it's sort of testing the waters, if you will.
At the meeting in Dubrovnik, European Securities and Markets Authority SMA Executive Director Natasha Kazanov put it bluntly, tokenized stock isn't actually stock ownership. Rather, a company buys actual stock and then issues you a token pegged to the price. It might seem convenient with 24/7 trading and the ability to buy fractional shares, but make no mistake, you don't have voting rights or receive dividends. If the platform doesn't clearly communicate this, retail investors could easily mistakenly believe they're shareholders. She emphasized that these products must clearly communicate information and implement risk management measures, otherwise problems will arise sooner or later.
The World Federation of Exchanges, WFE, has long sounded the alarm. These so-called tokenized stocks, without the protective umbrella of traditional stocks, could disrupt the market. Kazanov also poured cold water on this, stating that most current projects are small-scale and have poor liquidity. When they really want to sell, there's no guarantee they'll be as efficient as everyone hypes them up to be. However, she didn't outright condemn them. Instead, she revealed that the EU is conducting blockchain pilots, allowing companies to explore new possibilities under special exemptions. Put bluntly, regulation aims to achieve a two-pronged approach, protecting innovation from losing its advantages and protecting investors from being ripped off. Only in this way can this race be a marathon, rather than a mere 100-meter dash.
Cook's upcoming Trump dismissal lawsuit has become a hot topic. His lawyer is Washington bigwig Abe Lowell, a veritable all-star defense lawyer. He takes orders from both the Biden and Trump sides, and he has to give both sides some face. HKEX has launched WFLI dual currency win. To buy the dip, click buy low. And to cash out, choose sell high. Open the app, click explore, then find dual currency win. Click to learn more, all in 3 steps. The Wall Street Journal reports that U.S. Treasury Secretary Jeffrey Bessent will begin interviews on Friday to select the next Federal Reserve chair. Waller, Bowman, Hassett, and Warsh are all on the list of 11 candidates. NVIDIA clarifies it is true that the H100/H200 chips are not sold out and partners can rent them all, but that does not mean they are out of stock. You can still place an order if you want. According to HyperInsight, Huang Liqing, a big shot in the market, blew away 1,400 ETH, bringing his position to $130 million. Unfortunately, he's still losing $3.63 million, and with the liquidation line at $3,321, he's feeling a bit panicked.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.